Boeing makes airplanes. They had a big problem with one, but they make the greatest airplanes. They make the best airplanes in the world. They had the problem with one.
China's government has reportedly ordered its domestic airlines to stop accepting deliveries of Boeing jets and to halt purchases of aircraft parts from the U.S.
Of their demand when it comes to these commercial planes. So that's going to be really hard to replace.
Well, and Boeing CEO last month just said 80% of its commercial planes are delivered outside the U.S. So, yes, they manufacture domestically.
Boeing says it's operating in what it considers the most complex environment it's seen since World War II, from record demand for commercial jets and defense platforms.
A shockwave has just ripped through America's industrial core. The company that once symbolized U.S. pride in the skies, Boeing, has made a decision that could change the nation's economic future forever. In near silence, without the spectacle of a press conference, Boeing revealed plans to shift a portion of its production to Mexico. On paper, it looked like a business adjustment. In practice, it was an earthquake. Within hours, the political storm began, led by none other than Donald Trump. His response was explosive. He threatened a 200% tariff on any Boeing aircraft manufactured outside U.S. borders. The move wasn't just rhetoric. It was a direct warning shot aimed at one of America's most iconic corporations. And with that, a corporate strategy turned into a national crisis. For over a century, Boeing has stood as a towering symbol of American strength. Its planes carried U.S. troops during wars, presidents across the globe, and astronauts into the heavens. Its factories in Seattle, Wichita, and Missouri were not just industrial hubs, they were pillars of American identity. But now the unthinkable had happened. Boeing announced that to cut costs, improve flexibility, and survive mounting global competition, part of its assembly line would cross the border into Mexico. To Boeing, it was a technical decision in the fight for survival. To Washington, to workers, and to millions of Americans, it was seen as betrayal. The message seemed clear. If even Boeing was willing to offshore production, what hope was left for America's industrial workforce? The news didn't break on television cameras. It began with a phone call. In late September 2025, the Oval Office became the stage for confrontation. On one side of the line sat Donald Trump, his fury already boiling. On the other was Boeing's CEO, Kelly Ortberg, calm, deliberate, but braced for the clash. The exchange was sharp, terse, and unforgettable. Trump demanded answers. Why was Boeing moving America's crown jewel industry across the border? Ortberg responded with cold precision. Global competition was suffocating Boeing. China had frozen major orders. Airbus was rapidly gaining ground in Europe. Tariffs had fractured supply chains. We cannot build our future on short-term politics, Ortberg insisted. Trump snapped back, warning of a crushing 200% tariff on any aircraft assembled outside U.S. borders. Bring production home, or face the consequences, he barked. But Ortberg stood firm. Boeing would not reverse course. The call lasted less than 20 minutes, but its impact was seismic. Within hours, word of the standoff leaked to Washington insiders, then to the press, and finally to the world. Headlines blared about corporate defiance and presidential rage. On Wall Street, Boeing's stock plunged nearly 8% overnight, wiping billions from shareholder value. Pension funds tied to Boeing trembled. Factory towns in Kansas, Missouri, and Washington state felt the chill. Could layoffs be coming? Would their livelihoods vanish in the name of global survival? In Congress, lawmakers demanded hearings. Was Boeing acting out of necessity or thumbing its nose at American workers? Some saw Trump as defending jobs. Others accused him of election-year theater. Suddenly, Boeing wasn't just a company. It was the flashpoint in a national debate over globalization, economic nationalism, and the very soul of American industry. If Trump's threats were the opening shot, China's retaliation was the counterstrike. Beijing announced a 125% import tax on U.S. aircraft, instantly freezing contracts worth tens of billions. Deliveries to Shanghai and Shenzhen were halted. Planes that had already rolled off assembly lines in Wichita and Everett sat idle, gleaming monuments of political crossfire. For Boeing, the impact was catastrophic. China had accounted for nearly 1/5 of its orders. Now those jets became stranded assets, draining balance sheets. Union leaders warned of mass layoffs. Families across Boeing towns braced for pink slips. Meanwhile, Airbus and China's own manufacturer, COMAC, seized the opportunity. Their sales teams swooped in, promising cheaper financing and stability free of American politics. To airlines abroad, Boeing now looked less like a partner and more like a hostage of Washington's trade wars. Facing collapse, Boeing made a move few expected. Instead of begging Washington for relief, CEO Outburst executed an aggressive pivot. Hundreds of undelivered jets originally meant for Chinese carriers were redirected to India, Indonesia, Brazil, and beyond. Airlines in South Asia and Latin America rushed in to buy at discounted rates. By the end of the first quarter of 2025, Boeing delivered 130 aircraft, up from 83 the previous quarter. Revenue surged by nearly 18% year-over-year. Wall Street, once pessimistic, took notice. Analysts spoke of resilience, and some declared Boeing could claw its way back to profitability before year's end. On paper, it looked like salvation, but beneath the numbers lurked a deeper truth. This wasn't just about revenue. It was about redefining Boeing itself. Could a company so bound to America's national identity truly survive as a borderless global player untethered from Washington? Even as Boeing clawed its way into new markets, shadows of the past returned. The 737 MAX disasters, which killed hundreds, had already scarred the company's reputation. In January 2024, another blow came when a mid-air panel tore loose from a Boeing 737 MAX 9, forcing an emergency landing. The incident reignited fears about Boeing's safety standards. Then came repeated delays with the Starliner spacecraft, a symbol of lost aerospace leadership. To investors, these failures signaled negligence. To passengers, they seeded fear. To Washington, they raised doubts about whether Boeing still had the strength to carry America's industrial pride. And in the middle of a global trade war, these old wounds resurfaced with even more weight. Trust was no longer just an internal issue. It was a global liability. While Boeing struggled, its rivals thrived. In Toulouse and Hamburg, Airbus production lines hummed smoothly, shielded from Washington's chaos. Free from tariff battles, Airbus expanded its share in Africa, Europe, and even North America. Airlines weary of uncertainty signed long-term contracts, choosing stability over politics. But further east, a new contender loomed. COMAC, China's state-backed aerospace giant, once dismissed as a second-tier rival, was now stepping onto the global stage. Its C919 aircraft began flying regional routes across Asia and expanding into Africa and the Middle East. Backed by Beijing's subsidies and shielded from US tariffs, COMAC was suddenly a serious competitor. For governments wary of entanglement in US politics, a Chinese alternative looked attractive. Boeing now faced a double bind: restore trust while defending its market share against rivals advancing on two fronts. At this point, the crisis was no longer about one company. It had become a mirror of 21st century globalization colliding with nationalism. Tariffs once meant to protect jobs were now threatening them. A corporation built to compete worldwide was suddenly trapped between a nationalist president and a global marketplace demanding flexibility. The echoes of history rang loud. Protectionism in the 1930s, global recessions fueled by fractured trade. The stakes here were not just financial, they were ideological. Could America still lead in an interconnected world if its corporations were forced to choose between loyalty to Washington and competitiveness abroad? For Boeing, every contract signed overseas now had geopolitical consequences. For America, every aircraft built abroad raised questions about identity, pride, and economic resilience. The Boeing saga is no longer a headline about tariffs, stock prices, or even Donald Trump's anger. It is a story of survival in a fractured world. A century-old company, once synonymous with American dominance, is now caught in a storm where every move is scrutinized, politicized, and globalized. The question is not simply whether Boeing can deliver planes or restore profit margins. The deeper question is this: can Boeing serve two masters, a nation demanding loyalty and a world demanding competitiveness? If it bends to Washington, it risks losing global markets. If it pursues survival abroad, it risks losing America's trust. And in that struggle lies the future of not just one company, but the very idea of American industrial leadership. Will Boeing rise again, a symbol of resilience and adaptation? Or will it become a cautionary tale of what happens when politics collides with business? And trust, once broken, can never be fully rebuilt.